Good morning, everyone. Today is Wednesday. It is February the 27th, and this is the Futures in 5. Taking a look at the ES today, we are jammed in between support and resistance zones. Looking at our price action here, this is a fairly solid bounce zone, so I am going to suspect that buyers are going to sort of put themselves available here. Here's the thing. They can't get up over this 91 area. That's going to be bearish. So they're going to come in. It's by the dip action. But you're going to want to watch for that because there is a ton of technical divergence. And so if you are long thinking, all right, this is a trend, I've come into the moving average, realize that you're dancing around the 2-week VWAP. And so that's going to give us a little bit of noise. That's also the volume point of control. And so either you wait for the fade in the shallow space to take the long up into the resistance zones at 87 to 89, potentially 90, and then you start trimming gains. This is going to be support to resistance, resistance to support kind of day. There's a lot of cross current, and it is everywhere. Taking a look at the NQ, same sort of thing. Came down, old resistance, new support, divergent action to the downside, bullish price action to the upside from the underneath. So we know buyers are coming in here. First pass pullbacks are buy zones. We saw the first one with this candlestick at 1 a.m. Central. And now what we've done is reject this area at 71.08. It's going to be important. You can see from our depth of market that we've got price action. Let's see where we have motion that's here. We've got thin volume, and it's really thin up here. So they could come and fill it in easily. Pullbacks are going to be buy zones again. The pullbacks could be deep. The deepest support I see us trying to swing a bounce would be down here. And then if it can immediately get up and over, you've got to trim gains. You really have got to trim gains. Be very, very careful here. And as soon as you see these lower highs starting to present after lower lows, if you try to take a long, you've got to get out where you see sellers. That's the only way you can take money home at the end of the day. I mean, we're here to take money from the market every day. We're not investing per se in this space. So the mechanics we have to use are not investment mechanics, they're trading mechanics. And trading mechanics say take your profit when you see it. All right, it's not the same sort of thing. So we have to adapt to that. All right, so now this is the same YM looking old resistance, new support, bounce action, lower high. Now, same technical divergence, same bullish undercurrent giving us higher lows. And take a look, we've still got higher highs. So the great big picture says that the deep pullbacks are going to find buyers in the mix. We just have to be patient to say, okay, if the pullback is here, I'm going to put an alert right here at this guide. I'm going to see if it comes in / nearby. If it does, I'm going to move to a tight time frame and watch for my momentum mechanics and price action to build here. So I have a small risk event and a pretty good space for a profit zone. If I'm looking at downside action, I'm going to do the reverse. I'm going to watch it bounce, see that it's rejecting a zone potentially around this 26,045, and then we say, hey, you know what? I can trade it down into my support zones. But again, if you start to bounce at those support zones and you start coming back to test here, the overall trend is bullish. So that means that the bulls are going to take back over. Here's a chart that's really bouncing. We talked about 55 several times, and we got it again a couple of days ago, or maybe it was before the market opened yesterday, or yeah, this 55. And so it's a nice bounce up into what? Well, essentially, this is the first test of resistance, right? So we should see some sellers here. We did in this candlestick. They faded, but look at what they've held, right? Old resistance, new support. So if you're bullish on this action, it doesn't really tell you to get out. We've got the EIA, we've got some stuff going on over with India and Pakistan, and there's just all kinds of things roiling about, but this could easily continue upward. This is a very bullish space. for oil. It is holding steady. And so these pullbacks, like I mentioned, any deep pullbacks that you see, they're going to be bullish. Look at the wicks. They are really strong. It's also telling us not to buy the highs. Do you see this? Brand new high, dip down. That's a risk event. Brand new high, big dip down. Another risk event. Get in on the lows here, all right? Adaptive moving average is flat. That tells us that we're running into our next resistance areas. Very low volume profile conditions at 56.97. So you want to watch that. 56.80, 56.82, holding a lot of volume. And of course, we are fortunate to be looking at data provided by TopStep Trader and our charts by Motive Wave. Taking a look at gold, you know, I've stopped being bullish for the moment on gold. It's holding this region. Look at the price compression for days. Buy the low, sell the high. Now, what's happening in the interim is bullish pressure underneath and bearish pressure still holding. Overall, we're sitting in the neutral zone. So that tells me my dips could be a little deeper, but I should find buyers. And my bounces could be a little higher, but I should find sellers. That's the futures in 5. I'll see you tomorrow.